The Indian economy is set to close the financial year on a firm footing, especially given the global volatility. The collapse of the Silicon Valley Bank in the US has led to fears of a contagion, even though the Fed and other global regulators have stepped in swiftly to control the damage. Veteran banker Uday Kotak has cautioned that with a 500 basis point hike in interest rates in just 1 year alone, accidents were bound to happen. It is amidst this backdrop that business leaders and policymakers are meeting in the capital for the CII Partnership Summit to get a pulse check on the mood of corporate India. I'm now joined by the president of CII, Sanjiv Bajaj. Sanjiv, always a pleasure. Many thanks for joining us here on the program. Let me start by asking you about how fearful corporate India is in light of the developments that have taken place over the weekend, especially in the US, Silicon Valley Bank's collapse, and then, of course, the swift damage control by the Fed and other global regulators.
Good afternoon, Shireen. The fact that you correctly mentioned the swift action that has been taken, and especially the announcement by the US Treasury Secretary that all depositors will be protected, but not at the expense of the taxpayer. This should, by and large, take care of any immediate contagion impact. As much as one tries, you can't plan for every situation and you can't ensure safety in every situation. But how quickly one reacts to situations of turmoil like this also makes a very big difference to its own impact. But I do believe that it raises some issues to be thought through in the medium term. One very clearly, and Uday talked about it as you mentioned, is for any lending institution, particularly a bank, balancing and making sure that you have a conservative balance sheet is very important. Your ALM mismatches need to be to a minimal, because otherwise problems like this can arise. The second important issue over here is that to the startup world, this single bank, SVB, provided a significant part of their lending, took care of their money. And while I'm sure they did a great job there, but we clearly need some competition over there so that we don't reach a situation of such concentrated impact like this one could have been.
Right, you've laid several issues there. Let me just address the issue of the impact on the startup ecosystem, and especially the startup ecosystem here in India. Some companies have come out there and put out disclosures, whether it's Freshworks or Nazara Technologies, etc. We're also given to understand that Meti, Rajiv Chandrasekhar, the Minister of State, is going to be speaking with startups, etc. Has there been any assessment done by CII on the exposure or the impact of SVB on startups here?
It is WIP right now, but the immediate possible negative impact from startups that have their deposits there, at least that is taken care of with the comfort from the US government. What it means with respect to continual funding, this is something that needs to be seen. But it is again raising an important issue that as India Inc. and as government and the regulator, we need to think of the startup space in a far more holistic manner going forward with respect to funding, whether it's working capital, whether it's debt, whether it's equity. We can't just leave it to the larger independent environment because it's too important. We are the third largest startup nation in the world. So we need a more institutionalized approach to this.
Okay, Sanjiv, let's talk about interest rates now. And, one aspect that's being discussed at this point in time in light of what's happened with the SVB is that perhaps this may force the Fed to halt, to pause. I know that the industry here in India has been asking the MPC and the RBI to pause. What is the CII view in light of what we are seeing happen domestically as well as globally?
Pre the pandemic, we are still very much in a connected world, but each large economy, and especially one like India, acted based on parameters, controllable and uncontrollable parameters that it saw locally. The pandemic required concerted, coordinated action, including on interest rates. Hopefully that situation is behind us. And I think it's if the single one word I have to use, that is decouple. As a country now, our inflation is coming well under control. We have all the right levers for growth that's ready. The government has played a significant positive role with continued increase in infrastructure investment. This is now the time to get growth back, to get demand back, And we are seeing high capacity utilizations across multiple sectors on the private side. And these sectors are ready for investment, but they need to see consistent demand-led growth. So we hope that the RBI uses this as a trigger to pause and to decouple as far as the interest rate cycle is concerned. And this should then put us on that firm path to grow. I realize that we are still very much part of a connected world, but we have to be nimble. If the situation changes dramatically down the line, one can always review.
Okay, decouple, that is the message from the CII to the RBI when it comes to interest rates. But, you talked about investments and capacity utilization. Those incipient signs of private investment, Sanjiv Bajaj, that the government spoke of at the time of the budget and industry has been speaking of as well. Where do things now stand on that front?
I'm happy to say that in multiple sectors we've started to see new investment, whether it's steel, whether it's chemicals, whether it is electronics, textiles. So we are starting to see this increase in many segments, and we are at a situation where many other sectors are ready for new investment. Luckily, the banking system is both capable and ready to extend financial support as well. So all we need to see is steady growth, and we must keep in mind that as much as we are encouraged by the public sector capex cycle that has taken place, but the color of money for private sector is slightly different than that for public sector. There are borrowings, there's a certain level of return that is required on those investments to repay those borrowings, and we have to keep that in mind. But I am encouraged, and I hope that we see consistent growth coming in, which can result in new demand, consistent demand for that capex cycle to extend now to multiple more sectors.
You talked about growth and demand visibility and the fact that industry will actually set up fresh capacity if there is demand visibility. On the back of data coming in, especially the high frequency data, is there any signs of any loss of momentum of any kind, or do you believe that the kind of growth that we've seen is likely to sustain?
Well, the growth that we have seen has been unequal. We are seeing, for example, middle and upper middle class ended up saving a lot of money in the last few years, and they've been spending. The lower income class got hit a lot more, first with the pandemic, then with the impact of inflation. So spends there reduced in the last couple of years. We see rural India spends lower than urban India. So some of these will get corrected as we move forward. And towards that extent, I believe that while this year we will close probably with a GDP of 6% growth, next year could be 6.5%. The opportunity for us is to see that how do we align all our ducks so that as we go into the next year, by the second half of next year, we start outgrowing out of these numbers.
Okay, but at this point in time, in terms of credit growth, any softness that you're starting to see come in, or not yet?
Well, it's been consistent the last couple of quarters. It's, as you know, overall bank credit growth, also non-food, is in the mid-teens, much better than what it was a year ago. But we need to take it up to its to at least the low 20s. So for that, we need to see many more sectors starting to show secular demand growth.
Well, time for us to head into a break. But when we return, we continue our conversation with the president of CII, Sanjiv Bajaj, to get a pulse check on the mood across industry. Welcome back. You're watching the CEO Centimeter. We're in conversation with CII Sanjiv Bajaj, trying to gauge the pulse of India Inc. Let me ask you about one of the big issues that was thrown up during the course of the budget, and that had to do with the insurance sector. And I know that there's been intense conversation and dialogue with the industry and the government on getting the government to change its mind as far as the insurance policy threshold was concerned from a tax perspective. Any luck? Do you have any clarity on whether the government is willing to consider the changes that the industry is proposing?
So as you know, Shireen, I'm a biased party here, so I won't talk about my own view, but talk about more the CI view, and which is that very clearly CI is not asking for any particular benefit, especially for the upper income segments. But all that we are suggesting is that any such instrument which is long-term investment in nature should be also taxed as long-term. And there are discussions, I believe, going on at this point of time, and we hope that it leads to a conclusion which benefits the country as well as makes sense for the economy.
Yeah, well, you know, this is the month where the finance bill is going to be passed. So if at all there's any change, it will have to come in before the bill is passed. And as you pointed out, the dialogue is currently underway between industry and the government. But, you know, you talked about India. And while there is consensus that this is an opportunity and a compelling time for India and for Indian industry, a lot of foreign investors are looking at India. And of course, domestic industry is also looking at growth and demand at this point in time. In light of what has happened with the Adani Group, and I'm not trying to suggest that that is indicative of the strength or the lack of the strength as far as the Indian economy is concerned, but what could be the possible implications, at least in the short to medium term, of that event?
I believe that this is an individual incident. Like an economy overheats at times, a particular set of businesses could overheat as well, and they require immediate remedial action. I believe that is well underway from what one reads in the paper. I would not worry about this from an overall India impact, but I do believe that India has tremendous opportunity. It has its own set of challenges, and this requires concerted discussion, action for all constituents, not just domestic but international ones as well, governments, policymakers, experts. And that's why we are in the middle of this partnership summit of CII, which I believe is a great platform to bring thought leaders from around the world and different sectors together to discuss all kinds of issues, including such ones where you could have some negative actions or impacts that get taken, whether it's what you talked about with respect to the particular business group, whether it is with respect to the particular bank in the US. Once in a while such things happen, but they require quick remedial action.
You talked about conversations that are currently underway at the Partnership Summit. And I wanted to understand, what is the appetite of Indian business houses, of Indian business groups and business leaders at this point in time to actually look at opportunities globally? Is this a buyer's market? Are people looking at expanding globally at this point in time, or is it wait and watch?
Very much, not just at this point of time, but over the last decade or so, a number of Indian businesses are executing their global aspirations. And this is all size of businesses. Look at some of the startups. Some of the startups are already in multi-geographies, not just in India. And that's true across many sectors. When you look at auto components, when you're looking at electronics now, when you're looking, for example, at pharma, at chemicals, and the opportunity is there for many more sectors as well. So we are very much in the midst of this. COVID could have caused a pause for a few years, and we are seeing India Inc. come out even stronger and ready with its global aspirations.
Mm-hmm. Speaking of aspirations, at this point in time, what is the confidence level across India, especially in terms of hiring additionally?
Jobs is something which is always going to be very key, and we went through a period last year where we saw significant shortage on the tech side. That has got partly balanced right now. We are going through a phase where India is opening up to becoming that manufacturing and services hub for the world, which means we have to make sure that we have the right skilled jobs ready. We have to make sure that they are competitive and efficient. And we have to make sure that we organize our industry and our rules and regulations such that we can maximize on this. We are starting to see hiring across a few sectors, and based on further demand growth, you should see that happening even more.
So what's the key ask at this point in time from government, Sanjiv Bajaj, to capitalize on the momentum that we're currently in the midst of?
I would say two key asks. One very clearly from the regulator, from the banking regulator, is decouple pause interest rates. Let's stay nimble. The current situation clearly looks like inflation has moderated, so let's focus on growth. And as far as the government is concerned, they've done a lot, but continue focusing on ease of doing business and reducing cost of doing business. The rest India Inc. will do.
And as the rest India Inc. will do, and that has been government's hope as well, that India Inc. will step up to the challenge and start to invest as well. And I know that that's been something that the finance minister has been bringing up repeatedly with industry. But you know, I want to go back to the issues of introspection that you raised as well. And I think there's been a lot of focus in light of the developments that have taken place on things like related party transactions and, more importantly, related party transaction disclosures. You know, what is the dialogue within industry at this point in time on dealing with some of these issues?
See, very clearly, if we are going to become the manufacturing and services base for the world, we need to ensure that a high level of governance, transparency remains in what we do. But it's equally important that we create, keeping in mind what's happening globally, but we create a set of policies that make sense for us as a country, and we make sure that we have enough discussion and debate on them, and then open up a window in which we implement them. And you're talking on related party disclosures. Look at what's going to happen with respect to ESG compliance. That's throwing up a whole set of new challenges and opportunities as well. Look at on green financing. That's going to come with its own set of conditions. And our biggest challenge is going to be not with the large corporates, but how do we take all these and build the right capabilities, understanding with small and mid-sized businesses, which account for most of our economy. And the earlier we do it in an institutionalized, systematic manner, the more it will make sure that India Inc. gets aligned to meeting global challenges and opportunities.
Well, Sanjiv Bajaj, plenty of global challenges at this point in time, and plenty of opportunities as well for India Inc. to focus on. In your words, India Inc. is ready to step up to the challenge. The government has done its part. It is now time for business to do its bit. Always a pleasure. Appreciate you joining us here on the CEO Centimeter on CNBC-TV18. Thanks very much. That's it then on this edition of the CEO Centimeter. From all of us here, goodbye. Thanks for watching.
कब तक लंबी लाइनों में उम्र